what we're going to be covering, the topics we're going to be covering. I feel I kind of have the best time slot today, before or after coffee and before the Mexico-Poland football match. So I feel I have the most attention. While I'm representing IFAD today, my sojourn at IFAD has actually been fairly short. I've been here a year, and my remarks are informed not only by IFAD and what we're doing in IFAD, but also by my career in this area of finance and agriculture. Much of it has been spent in the Latin America region. So for me, agri-SMEs are absolutely indispensable actors within the value chain. And at IFAD, while in the past we have focused a lot on producers and producer groups, we too are investing more and more in the value chains and their agri-SMEs as instruments of inclusive growth. So between just a few figures, between 2010 and 2021, IFAD approved 347 projects in total, of which 249 were primarily in value chains. APR is the region, APR Asia Pacific is the region with the most value chain projects and the greatest investments. The value chains are primarily crop-based and are mostly domestic, reflecting the focus on food systems and securities. But nonetheless, as a result of our investments, we have realized that we need to up our game in terms of design and implementation support to these value chain projects. Only 44% of our value chain projects engage intensively with the private sector. We realize that needs to change, and we need private sector solutions for market-based value chains. And while still small, in our current portfolio of value chain projects, agribusinesses are providing 6% of the funding, which is approximately So in view of our investments in value chains, IFAD has recognized the need to increase our pool of experts in value chains, hiring additional senior technical specialists. We continue to develop research and models for working with farm organizations, which we treat as integral parts of the value chains. And because we recognize the importance of the value chain actors as part of a systems approach, okay, I'm sorry. Part of systems approach, we have also turned to our relationship with SAFIN as the incubator, as a vital resource for technical elements, best practices, and relationships among in the agri-SME sector. So in particular, we see opportunities to work with SAFIN in convening a community of practitioners which share our language, priorities, and focus. We look to SAFIN for knowledge creation, dissemination, and the aggregation of a rich set of experiences for learning. And we seek to also learn from SAFIN in terms of models of collaboration between partners. So today it's my pleasure to very briefly introduce you to a number of SAFIN themes which concern all of us, and as we work to increase the resilience and opportunities for agri-SMEs. Session 1, shocks when they happen, and no one can deny that we have been living through a period of change, which may not end too soon. We are well met by firms or SMEs which internalize resilience. But as they shift the status quo, as the status quo shifts, they also reveal business opportunities. And so the first session today delves into the effects of recent instability on the sector and offers us a glimpse into a recent survey on how agribusinesses are coping and in some cases thriving. We then turn to the raison d'etre of SAFIN and get an update on some of the key and to date successful engagement financing models for farmer organizations and agri-SMEs in session 2. Session 3, mainstreaming green finance for agri-SMEs remains challenging, and especially in what seems to be a funding surplus. Yet in the context where there are so many attention grabbers, this next session discusses, or the third session will discuss how green finance is still relevant and how we can make it still relevant in these times. In agri-SME, finance and beyond, digital innovations offer a whisper of a transformation to come. If scale can be achieved, can we solve the problems of asymmetry of information and high transaction costs? This session on digital innovations offers members promising solutions which have achieved scale and shows what it takes to do so. Session 5, farmer organizations make up an essential component in VCs and are a key focus for many of us here. How can we use finance and other services to enhance productivity, improve resilience, and increase the value added and incomes for these organizations? Today's session will introduce you to SAFIN's Phase 2 survey and results on access to finance for farmers' organizations, where we expand Phase 1 to an additional 12 countries. Our final technical session is on BDS. Many investments in the agri-SME sector utilize business development services, and near the end of the day, we will get a preliminary glimpse of a study that costs. So to close out our busy, informative day, our colleague and fellow SAFIN member, Amanda Fernandez from Palladium, will discuss the key takeaways from today. And finally, for those of us in the room, we could get a chance to relax, network, meet again our fellow attendees in person with a reception dinner held at the hotel. Thank you very much, and I now pass it back on to Frank.
Thank you, Lorna. Thank you for speeding through your presentation. Traffic in Mexico, in Morelia. So we're ready to start. Just reconfirming, Leonard and Alexandre, you can hear me? Please nod. Yes, you can hear me. Very good. Okay, fantastic. So let's get started with today's technical sessions. I have the pleasure of introducing both and Fisheries, Directorate General for International Partnership at the European Commission, who will be giving our keynote speech on the changing and evolving landscape and potential effects that this may have in the future on our target audience, agri-SMEs. Welcome, over to you.
Thank you, Frank, and thanks to colleagues in Mexico. Yes, as a football enthusiastic myself, and having seen the result of Argentina against Saudi, I'm not going to prejudge what Mexico will perform without one of our member states, but I augur for a very good match. And I know, in fact, I have a number of colleagues in my team who are married to Mexicans and are actually supporting Mexico in the coming few hours. So thanks again for SAFIN for organizing this meeting, a very timely meeting. Not only I heard the introductory remarks clearly, 2022 will certainly be remembered for one of the most, I would say, turbulent years, which not only impacted the agri-food sector, but the whole landscape of economic finance around value chains, beyond clearly agricultural value chains. For us, this topic is important, not only where the European Union and the member states are showing leadership in a very geopolitical context. I can't overemphasize what we have been through since the aggression of Russia on Ukraine in the first quarter of 2022. We are still experiencing, and what's happening on a daily basis in this part of Europe is clearly a testimony that the protraction of this conflict, of this war, is having and will have an already amplified shock to a very vulnerable global food system, which experienced COVID, which experienced clearly conflict in a number of African countries, but not only in Africa, which experienced climate shocks. Daily, we hear of shocks or natural disasters. In the past 24 hours, Solomon Islands, earthquake, tsunami, and Indonesia earthquake. So the issue of resilience and how small and micro and small and medium-sized enterprises operate in this complicated and difficult scenario is critical. And I would like maybe to elaborate what we as European Union, but what the global community could maybe do better in terms of coordination. I just was in a discussion with the global donor platform on rural development, where also IFAD and a number of other partners are actually key. In fact, the secretariat is hosted by IFAD, where the issue of better coordination and mapping out what's happening out there is critical. We all ourselves are involved in one way or another with mapping and landscape analysis of what's happening across the globe, at global public goods, at regional level, continental with the African Continental Free Trade Area, and country level. Many of you also have been following since the UN Food System Summit, the country pathways, country-driven agendas. But now I think at the juncture of the end of 2022, as we also move into 2023, where there is going to be a UN Food System Summit stocktake in the next 7 months, I think it's important that SAFIN, the membership of SAFIN also, in the context of an enhanced coordination effort, go and enter into a deeper dive of what is being done at country level. There's a lot of activity, but it's not always coordinated at the best level. Yes, there have been a number of initiatives in the past months. I just want to mention a few. There is GAFS, the Global Alliance on Food Security, under the presidency of the G7 German presidency, where we are very active. And I know that many of you know and have been following this. There has been the launch of a dashboard a few weeks ago, the work and the communique around the G20, which was not bad considering the circumstances, the work around what the IMF and the World Bank have been doing, also including the recent developments since the autumn meetings of the IMF and World Bank, the launching of the food window as well. What is important, I think, is that we go into the granularity of country specifics. What's happening in countries like Malawi, in Tanzania, in Chad, in Togo, in Benin, and what typology of interventions need to be accompanied around the specific agri-food SMEs. We still see a proliferation of initiatives, sometimes competition of initiatives, even around specific value chains. I would say geopolitics of initiatives which are not always aligned, including amongst the donor community. There is a typology of interventions. I give you the example of fertilizers, for example. We're being bombarded every day on what typology of short, medium to long-term interventions we should do around fertilizers. Should we enter into synthetics? Should we enter into more organic and more agroecology approaches? So targeted synthetics, but weaning them off gradually into a more agroecology approach, which is our preferred option. How do you reconcile the short to medium and long term if you want to enter into a transformative approach? What is the cost of the status quo or of unsmart subsidies around input subsidies and typology of interventions linked to voucher schemes and also to the production of synthetic fertilizers, or even in green ammonia or hydrogen-related activities, if not even the basics of renewable energy are linked to the grid, then what about linking more green ammonia to the fertilizer industry? So I think we sometimes have the expertise, but then how to link it to the public policy discourse in a way which is smart. We have heard IFPRI and a number of a lot of think tanks speaking about repurposing, including the World Bank. So repurposing policies with the amounts of funds we have, but how to also link the macroeconomic rebalancing of a landscape which is becoming more and more complicated in terms of shocks, food price inflation, exchange rate misalignment, what's happening, for example, with the Naira in Nigeria, a very delicate issue in terms of what needs to be between exportable commodities and also local commodities, which are more for the local and regional markets, and what is the role of intra-regional agri-food trade in the African continent. Because we are always saying yes to enhance value chains, but to enhance value chains within which context of the African continental free trade area. There is still lack of integration of the African markets, lots of distortion still, whether we speak about barriers to trade, SPS issues, infrastructure, cold storage. I think that part of the sub-regional dynamics need also to be entered into certain detail, and the financial instruments to accompany all this. We know that the ODA, the EU, just to give you an example, we have mobilized for the period 21-24 between humanitarian and more medium to long-term interventions around 8 billion. This is global. This includes around 2 billion of humanitarian interventions for the period up to 24. This is across more than 70 countries, practically most of the countries of Africa, especially in sub-Saharan Africa. Is this enough? Clearly, it's not enough. And it's private sector funding, it's private development funding that will need to do the trick in the medium to long term. But there we also see the experience we have with the ABC fund, with our Agrify funds, with our country windows, and also the work we do also with Huruma Fund and Cofidis. We also find that blending operations are fine. Small ticket sizes take a long time to be rolled out. Guarantees, we have an instrument which is called the EFSD Plus, where we are now analyzing and will have an operational board on the 15th of December on the portfolios for the next few years. We see that the risk aversion appetite of financial institutions is still pretty high. Clearly, financial institutions want to go more clearly scale up into renewable energies, into digital platforms, into cross-cutting SMEs, but not necessarily scale up the guarantee operations for SMEs. So there is the work that we are engaging also with IFAD as part of our portfolio. We have a portfolio of 52.5 million under the EDF decommitments, which are the extra 600 million that the member states mobilized for the response of the Ukrainian crisis. But this, again, is not going to be enough with all the challenges around the African continent in particular. So for us, I think if I were to summarize in three take-home messages, first of all, the need for prioritization. We often see, and we're doing a bit of a mapping around the value chains, because it's good to speak about agricultural value chains and them SMEs, but prioritization around which typology of which value chains. We can't have impact with the amounts we have, even as EU and member states, to be in 10, 15 value chains. So our political masters are also telling us you need to focus. And we don't need to focus necessarily on exportables, on cocoa, or on coffee necessarily, or tea, or cotton, but we need to focus on those value chains which can have massive impact. We're also trying to work around agropastoralism, around aquatic and blue foods, but we can't work across all agricultural value chains. If we want to have the impact that we want, and also link it to gender transformative approaches, into a landscape approach factoring biodiversity, agrobiodiversity, and climate adaptation to climate change, and also the equity issues from an inclusive point of view. That's first one. So we are interested to see what do we need to do where, from simple or relatively simple fruit and vegetable operations or processed fruit and vegetables to more complicated landscape approaches around agroforestry and cocoa, or around cotton and textile markets. A big event around regional value chains is happening these days in Niamey with ITC and UNIDO, and we are looking into what is the traction of regional value chains from fortified foods to textiles and beyond. That's the first one, country by country, but also regional and continental. The example which is often given to us is, can we replicate for food what is being done for vaccines? And food is not vaccines. You can easily create a vaccine, or at least for COVID, there was a vaccine. There is a vaccine, number of vaccines. It's not easy to create the same for food systems. But we are being asked and tasked to increase the strategic autonomy of Africa, where we know the recent FAO Food Outlook report shows an import bill of around 60 billion. And this is spiraling up. So more strategic autonomy, but not at the cost of intra-regional trade or trade flows per se. Secondly, typology of financial instruments, avoiding greenwashing, and what can we do better around green finance. I heard that one of the discussions is on green finance, but it would be good to also understand the complexities around carbon sequestration, carbon credits, and how this benefits small ticket sizes, small farm holders, not big commercial farms. So how can we organize ourselves better, also supporting small farm holders, women-led organizations, and cooperatives to tap into the green finance dimension? And last but not least, how to unleash the full potential of digital artificial intelligence in a smart way, where we experienced this in COVID, where e-commerce platforms, e-voucher schemes have worked, but how can we also maybe go beyond the fluff that sometimes exists around some of these terminologies, but also show enhanced transparency of the value chains and the return on investment for small farm holders with more transparent food systems. So if the SAFIN network can also start showcasing and highlighting good success stories, reviewing this across the African continent, we can also start communicating this in the run-up to the UN Food Systems Summit. We have a meeting with Stefanos Fotiou as part of the UN Food Systems Hub, and maybe identify 15, 20 countries where we can really show steering, leadership, but also scalability, and more importantly, an intra-regional potential of a number of value chains where we can be truly transformational during the course of 2023. Over to you.
Thank you so much, Leonard, for the fantastic keynote and setting the stage for what is going to be now a very interesting discussion that will be facilitated by Alexandre Kaufmann, who you see there on the screen. Alexandre is the Agribusiness Investment Specialist at the United Nations Food and Agriculture Organization, FAO. Alexandre will be focusing his facilitation with the audience members, focusing mostly on some of the areas that Leonard mentioned and how it affects directly agri-SMEs and access to finance, which of course is the topic of SAFIN as a network. And also, hello. Yes. Sorry, can you hear me? Yeah. Leonard, wanted to thank you for mentioning and highlighting what role SAFIN can play in the sector in the future, which I thought was very, very interesting, and it's duly noted. So without further ado, passing it off to Alexandre for the facilitated discussion. Alexandre, over to you, and welcome.
Thank you, Frank, and buenos dias, Mexico. Well, Leonard, thank you very much. I mean, you really made my life easier with this great opening. I had prepared a long intro, but clearly don't need to talk much because you mentioned everything, I guess. As Frank say, we're here to discuss the impact of the multiple crises going on at the moment on agri-SMEs. And Leonard, I think you mentioned all of this crisis and shocks. Clearly, the war in Ukraine, the consequences in terms of food and fertilizer prices. In some countries, actually, the physical availability of some of this product, especially fertilizers, but also the energy crisis, climate change, and inflation, its impact on consumers' purchasing powers, FX volatility. You mentioned the Nigerian example. So many crises, and I think all of you, we've all been hearing stories about the impact of this crisis on SMEs in terms of financial performance, of course, in terms of access to finance. Many challenges indeed, but in some case, some opportunities too. And it's in this context that SAFIN and FO Investment Center just started conducting a short study on this, trying to collect more evidence, not just anecdote, but evidence on what's really happening on the ground at the level of the SMEs and what can be done. And Leonard, thank you for mentioning many of the solutions that the European Commission has been pioneering in terms of blended instruments and guarantees. We'll discuss that later, I'm sure. So this study with SAFIN just started, but a first observation is that agri-SMEs are all different and all impacted in a different way. So the objective of this session is precisely to hear the SAFIN members and the audience views and stories on this topic. So if you're an entrepreneur, how is your business affected by this crisis, and how did you answer to them? If you're a lender or a financial investors, how has your portfolio been affected, and have you adjusted your investment strategy based on this new reality? So the idea is to have an interactive discussion. Please use the chat to ask any question you may have, or to share any story. Of course, please don't hesitate also to ask questions directly in relation with Leonard's speech, and we'll transmit these questions via the chat. We also have the chance to have with us three important and different financial investors in the audience. We have Jean-Marc Debricon, CEO at AltaFin. We have Christian Ruehmer, Chief Investment Officer at Bamboo. And Leonard, you mentioned the ABC fund supported by the EC and which is managed by Bamboo. And we also have the chance to have Mauricio Benitez, who's food systems lead at responsAbilty, the big impact fund. So maybe to kick off the discussion and waiting to get more comments on the chat, maybe we'll jump immediately into the meat of the topic. And Jean-Marc from AltaFin, may I ask you, okay, we talk about all these macro problems and macro issues, but at the level of AltaFin, how has your portfolio, and especially agri portfolio, been impacted by the ongoing crisis, which have been listed by Leonard?
Thanks, Alexandre. Yes, well, first of all, I'd like to go back a little bit in time by 2.5 years. At the beginning of the pandemic, we assumed that our agri portfolio would suffer more than it actually did. Two things happened during the following 2.5 years. First, whilst we assumed there would be higher level of defaults, the opposite happened. We had fewer defaults over the past 2.5 years than initially expected. And second, actually, we had increased demand for agri-financing. Some of it was linked to the fact that some of the value chain prices went up, like coffee, and so there was a higher need for working capital for the same volumes because they were valued more. And some of it was probably due to more awareness, generally speaking, about the need for sustainable food systems. if we are more responsible in our production and our consumption of food that is good for the environment, that is good for the health of its consumers, that is good for the farmers, then as a society, we will be doing better. And I think, Leonard was spot on when he mentioned resilience, because this is really what characterized how our agri portfolio fared in those last 2.5 years. We usually disburse about 80 million euros per year. And traditionally, agriculture represents about 60% of that. The rest is in microfinance. During the COVID years, it actually went as high as 80%. So 80% of our disbursements were to agri-cooperative and agri-SMEs involving smallholder farmers. Now, since then, what's happening? Well, I think the inflation surge really is something very recent, okay? It's really over the summer that it hit us. So it hasn't been priced in yet. And I think we still need to see that, to see its impact in our portfolios. What I would expect is more risk. And by that, more defaults and probably higher losses given default. And then we have to look, again, as Leonard mentioned, at a better coordination to find solutions to de-risk. This is not something that we are going to be able on our own to address. We can do some things, but there are better coordinated solutions, and I probably will stop here and hand over to someone else because I'm probably talking too much already.
Thank you very much, Jean-Marc, yeah, we hear you talking about the resilience of the sector and crisis also being an opportunity, but you obviously need to be in position to mitigate this risk, and that's where cooperation is very much needed. Maybe Christian, do you agree with Jean-Marc's statements, or how do you see the impact at Bamboo and ABC Soil in the portfolio?
It's absolutely. I mean, in the market here, even also the case, of course, are in the position that to just build up maybe funds at a time when one is the other. I think we were able to disperse 2 transactions before the pandemic hit us, and then of course we had to handle the increased risk scenario, but temporarily an excessive liquidity overhang in markets that made it very difficult to really provide value added as relative to the farmers, to the market. Right now, what we see is indeed a much higher risk profile around SMEs, and not just a higher risk profile, but the requirement for much more hand-holding, meaning in the forms of managing the transaction over the line with us, amendments, concessions, to make sure kind of shortcomings is being driven by the value disruption or the shipping transaction disruptions, the price increases, the lack of access to fertilizers and so on. There's much more need for these SMEs, which makes it extremely difficult, even if we are on the ground in some offices, but it makes it extremely difficult to really manage. As a consequence, unfortunately, this way, the investment to an inclusion microfinance handling on farming models, the go-to solution for us right now, simply because we cannot expose us to a risk environment where really don't everyday handling. So in the end, we're going back to benefiting from the fact that there are financial institutions, microfinance on the ground, trying to support them in enforcing agricultural lending. But in the end, that's currently the solution that we are striving for.
Thank you. Thank you very much, Christian. And Mauricio, do you agree with that diagnostic made by Christian and Jean-Marc?
Yes, I think we just see the same risks in the portfolio. Our portfolio is global and is diversified, but still risks are accumulating, and you can see that across the board. I agree that doesn't mean immediately defaults or workouts. It's just that correlation and certain risks are just accumulating, and you will see them materialize later. And particularly the prospects are not encouraging because the interest rates are also on the rise. That is hurting on both sides, our liabilities and our assets. And they cannot be passed on entirely. That will also increase the risk of repayment of certain loans because costs are increasing for the SMEs, but that also they cannot really transfer the price, the costs to their clients one-to-one. And on top, if you have higher refinancing costs, then they are hurt. So it was one example, and also it depends what you do. There are certain products that they are less affected. You know, the global commodities, even if they are certified or not. But there are others that they are organic and more niche, and they export to Europe. And we can really see that also the coming recession in the developed world is affecting these type of products because demand is B2B, B2C is really going down, and they were projecting constant growth of 10-20% over the years, and now they have a contraction. So they also have invested to grow in this until last year booming products because they were very interesting in these markets, and now the recession just hitting those niche products. So I can. These are the risks, but also we are launching a new fund that is particularly on climate, and that is long term. So we have to also see that this will have or give us opportunity to invest long term if we have, and this is what I agree with Leonard, the right vehicles to take these opportunities. So if you think long term, all these clouds, they are, you can be above the clouds and look 8 to 10 years. And this fund is blended, so we have the support of government, and we have over private investors, and they're supposed to take a long view, and it has a good component of technical assistance. So there you have more fundamental risks like climate change that you can address it with technical assistance because you can support agribusinesses or even banks to assess their portfolio, assess their products, their crops, and see how they will fare over the next 10 years. And as impact investor, instead of saying no to those SMEs, you actually work with them to make them more resilient over the past 10 years. So it's not that a crop will not work and that's it. As a banker, you say no. No, as an impact investor, you should work with that assessment and implement the practices to create resilience. So that's where we see opportunity because short term, you can say no, risk, but long term, you could see an opportunity and say, well, you could work with the companies and make that business flourish. And also, I agree, we are all considering now new types of funds that are long-term, that work with SMEs, and they work on removal, so carbon. That will allow, and you have the biochar, the silvopasture systems, all these that could allow access to carbon credits and even will allow to democratize or give wider access to insurance. So there are many opportunities out there that could be exploited, but that's only with a long-term view. In the short term, we see clouds. We need to manage the risks. That portfolio we are communicating with investors. For that short-term portfolio, they are all private. So we need to manage expectations. Whereas the long-term view, you could really see probably opportunities, despite having this very risky sector, right? It's agriculture, SMEs, developing countries, on top we have to have the gender angle, climate risk. So it's complicated. So blended and technical assistance, they are the key to take these opportunities further. And yes, there are many, but you need the right vehicles and the right investors. Short term, private investors just need to manage these risks.
Thank you, Mauricio. Thank you very much. Leonard, actually, I think both Jean-Marc and Kristen call for more cooperation, and that's a point you mentioned in your opening speech, the need for more coordination. And maybe can you tell us what's your view on why we don't see enough coordination? And by coordination, I mean both between government donors, also between the public and private sector. And we know that coordination is in the very DNA of the European Union. So why is this coordination lacking, and what can be done to do more?
Alexandre, I think there are genuine attempts at better coordination. What GAFS has been trying to do during 2022 with another dashboard is key. However, one I can't mention because it was Chatham House, but one of the partner countries in sub-Saharan Africa actually said, yes, there is donor coordination in my country, but it's more like a club for donors to discuss what they want to do amongst themselves. And then it's not really aligned to what the priorities of the country is. It's like pet projects, initiatives. And I think it's not always done in a multi-stakeholder approach. We also know, and this was said also this morning at the GTPRD, coordination costs energy, effort, and we know we are in a world of speed. We need silver bullet solutions, which are quick, fast, and impactful. If I were to share with you a bit what the asks of my top management and the commissioners want these days, it is answer now for now or for yesterday. And this is not going to be in the agri-food sector. I just gave the example of what was done or what's being done on vaccines or on renewables is not easily transformed or replicable in food systems. And sometimes it's also a pedagogical approach that we need to do with politicians, that there are no easy solutions for agri-food systems compared to energy or to the health vaccine sector in particular. What I think SAFIN niche and role could be, first of all, in terms of mapping out, because we know what the gaps are, what the challenges are, but then we see a lot of work around climate and climate finance and what came out of COP, and now we go to Montreal on nature-based solutions and biodiversity. Actually, the landscape of finance around climate and biodiversity exists. But the question that we are often asked is, when we meet farmers' organizations or small operators on smallish ticket sizes, is, but what's in it for me? How can I benefit? What is the impact for the millions of operators? What is the risk appetite to go into ticket sizes? And now I know in our ticket sizes, we tend to go very low, usually even in the range of 1 million. Sometimes even 800,000, sometimes lower. But I was in a meeting on fruit and vegetables a week ago here in Brussels, and they told me, yes, but we need to go into even more smaller ticket sizes because we had problems on 250,000, even 200,000. So I think the issue of reaching out, and I haven't spoken about exchange rate risks, about the food inflation risk, you spoke about interest rate increases. So all this requires a bit of a smart approach, which also includes players like the IMF, the World Bank, what's happening also on the food window that the IMF unveiled at the end of September, beginning of October is important because the issue of macroeconomic balance. But maybe we also need to use the network to maybe have a typology of cases where these are the typical questions we are asked. How can we help or support countries like Sri Lanka or Pakistan or the Sahelian countries where there is strong fragility besides fragility linked to conflict and fragility around climate shocks? Same with parts of the IFAD, Southern African countries, and then Central America and the Caribbean, same with the Pacific. So a bit of what can we do, where, and how can we showcase, as I said, in the run-up to the stocktake of the UN Food System Summit at the highest level, what could be really transformational and a smart approach around the access to finance and the work of the follow-up also of COP Sharm el-Sheikh, and how to handle issues like deforestation-free value chains. How do you handle the integration approach of child labor, deforestation, living income? This is the work that we are trying to do just on one value chain in just 3 countries, cocoa, in Ghana, Cote d'Ivoire, and Cameroon. Imagine if we have to do it, which has to be multi-stakeholder, inclusive, empowering. This is demand driven by the countries concerned, very sort of transparent approach. If we want to do it in palm oil, in livestock, in coffee, and rubber, and a number of value chains. It's not going to be an easy process, but we need all hands on deck. And wherever you think that there could be opportunities, G7, G20, multilateral, bilateral with us in a Team Europe approach, because we are also trying to coordinate within the European Union. It's not just preaching to others, but also coordination within the EU with the 27 member states. That is the way forward to be impactful, because we are being tasked to be impactful and scalable. Small projects here and there are okay, nice, but it will not be necessarily transformational and impactful.
Thank you, Leonard, for this very, very comprehensive answer. Frank, do we have any questions in Mexico from the audience, or the beauty of these hybrid events?
Thanks, Alexander. Let me see from our end. Anyone here? Oh, Lorna, great. Hold on. Here comes a question.
Thank you very much. I really appreciate the connection, or the lack of connection we seem to have with getting things to the smallholders and the farmer organizations, and I appreciate those comments. But my question is for Jean-Marc. In your presentation, what, in your estimation, makes an agri-SME more or less resilient to shocks and crisis? So in terms of what the profile of the SMEs might look like, so type, where it fits in the value chain, the character of the balance sheet, management, flexibility, vision, type of SME, and the access to ready finance. Those are just some thoughts, but you might have some others. Thanks.
Thanks, Lorna. It's actually a very difficult question to answer. And if I was perfectly able to answer it, I probably would have 0 default, or at least 0 losses given default in our portfolio. But let's make a comparison. I think during the pandemic, the microfinance sector suffered more than the agri one, and particularly the tier 2 and tier 3 organizations, because they were smaller, they had lower capital base, and they had less access to diversified funding. And if you look at agri-SMEs, they are in a similar position. They don't necessarily have the choice in funding. Okay, we deal with a lot of small organizations. Okay, our average loan is about 350,000, and for 50% of our agri partners, we were the first and only lender. So they don't really have much choice. And what we're trying to do is, over time, to build them up, to let them grow in a sustainable way, to improve them based on our due diligence assessments to try to address their weaknesses. Now, Mauricio pointed at the need for technical assistance, and that's exactly what's needed. It's a perfect way of de-risking our investments and making these small organizations more interesting for other lenders, other investors. And if you allow me, I'd like to give the example of the Snoop platform in Luxembourg, which is a very interesting initiative with public money that is making funds available to lenders such as ourselves and others, such as Oncocredit, for instance, and allows us to fund technical assistance projects globally, but with also quite a keen focus on Africa. So I think that's one very interesting aspect of de-risking and of making these smaller organizations more resilient. Another one is through another initiative, which was originally from CSAF, the Council for Smallholder Agriculture Finance, and that is the ACELI platform. And again, ACELI platform is kind of a blended finance approach, public-private money, allowing for subsidies to be made in order to target really the missing middles, those small agri-SMEs and co-op, by providing first lot subsidies, but also originations incentives by pushing people like us to lend more to these organizations. If we look at it, you know, over the last 3 years, we disbursed funds to organizations for average $100,000. For some of them, we would never have done it without the support of ACELI. At the end of the third cycle of lending, we only had 2 defaults. Both of them are kind of solved by now, and we had no losses on that portfolio. So these are small loans that technically should not be economically interesting for us, but that ended up being very interesting because we developed a partnership with borrowers and believe that for some of them, there will be an opportunity to see them over time improve and becoming more attractive for other lenders.
Great. Thank you, Jean-Marc. I realize that we're a little bit over the time. We're going to go just 3 more minutes. Leonard, if you can just hang on just 3 more minutes, please, and other participants. We have another question here in Mexico. Over to you, Hernan.
Thank you. Good morning and afternoon, colleagues. My name is Hernan Manson. I work for ITC, and I'm a SAFIN steering committee member. Good to see you, Leonard. Now, I have 2 questions, and Alexandre, you can choose who can answer, or people can answer as they wish. One is related to SAFIN and SAFIN network, and we are talking about the power of coordination, knowledge sharing, but we are also saying that it is only really realized if it leads to collective action, to having partnerships that actually deliver new solutions or at least create synergies between the people here. As SAFIN, we have SMEs, farmer organizations, NGOs that represent farmer organizations, financial institutions, we have donors and some of the private sector. So the question is, what in your view and your understanding of what SAFIN is it that we need to do in order to go into action? What type of action can result of this network beyond the knowledge sharing? So that's an open question. And then the second question, somebody said that it's really about having the right type of vehicles in order to leverage impact. Now, I was wondering that is it only because we need the new type of financial mechanism or innovative solution, or are there other constraints that are not financial that we need to take into consideration, right? You spoke about technical assistance as a way to de-risk. Okay, this is very well noted. But what else? Is it related also to capabilities of the different stakeholders? Is it related to governance of these food systems or value chains and private sector? And I would really have very interesting to understand your views on this. You know, what else do we need to look into beyond the actual financial mechanism and how can we solve that? Thank you.
Well, thank you very much for these two excellent questions. I think maybe the first one, maybe to Mauricio, since you're the ones really taking the financial risk, working closely to the entrepreneurs. Maybe you can pick that first question in terms of what do you need really.
Yeah, well, actually, I would like to tackle the second one, please, because that's more related to what I'm doing now, which is new funds, new vehicles for climate finance and food systems. And one is the structure. I mean, it was well said. What are there? We have real and perceived risks in this business, and we bring track records. So we've been doing this 15 years. We can show that we have experience, but then you have real risks and perceived risks that need the blended finance. So that's the easy explanation why the financial risk, but it's spot on that it's not only that. For example, COP27, there's now money for adaptation, for loss and damage, and that is very important to us because farmers are unfairly and disproportionately affected by climate change. So that means more blended finance coming our way, supposedly. But there's very little detail on how that could leverage private capital. This is still very risky, and this is even longer term. And how can you measure adaptation? For example, resilience is relatively easier because climate. So all those aspects, there are technical aspects that need to be solved. And the good thing about, for example, this is one example about adaptation is that the same practices that you do to promote resilience, they also do mitigation in agriculture. We're blessed because in other emitting sectors, it's less obvious. Here, if we do resilience, we can do also mitigation. So that will allow you to have access, for example, to carbon credits, to have access to the funds of the European Union, probably, but you can work on both. But still, you will need to assess how to overcome the costs per unit of the standards, the verification, and the monitoring of carbon credits. So that's another technical aspect. And so there are platforms out there, digitalization, tokenization, blockchain, but all these aspects, as you already say, it's not financial, they're technical. So we will still have to solve that, and that's only with support of technology and science. So partnerships are key. For the other fund, we have partnered with the CGRR, which are the best known scientists for climate smart agriculture and food systems. For a new fund on adaptation, you have to partner with other scientists because we are financial providers. We cannot really answer all these questions. So partnerships are key. And that is part of the vehicle design. So you have your strategy, your blended finance, but also you need partnership to tackle these technical aspects. Sorry if I went over a bit of the time.
No, thank you, Mauricio. I think that was a very clear answer. And the referee is telling me that we went into extra time, like a football game, and we may have to close. So, Frank, I don't know if we have time for more answers, or you tell me, because I think this discussion could continue for hours. Great interest, but.
Yes, Alex, I agree with you. It's a shame that we're already way over time, but we have quite a packed schedule, and I know that we have people like Leonard who have other meetings and are very, very busy. So I don't want to keep people past the time too long. So I say we wrap up here. We're taking note of some of these excellent questions prepared on the comments. First of all, many thanks again to Leonard, to Alex, to Jean-Marc, to Mauricio, and to Christian, who needed to drop off for the very interesting discussion and panel. We've taken note of all of these interesting points, especially those related to how SAFIN can have a greater impact. Fantastic way to launch the rest of the day. Please feel free to stay on if you want to hear the next few sessions. Are all very relevant, interesting to our work, so you're welcome to stay on. And with that, I will close the session and thank all of the audience for participating, and have a great rest of the day.